Hey guys, welcome back. In today's video, we are going to be talking about AMC shorts losing billions of dollars, why they need us, the margin calls incoming, and many more in this video. Firstly, we're taking a look at this. Shorts double down badly. Any small movement will cause massive losses. AMC under $2, a run to even 10 could cause liquidations and value of shorts to skyrocket, requiring increased margin exponentially. Now, what we are referring to is this particular article, and as you guys can see by the price, this was quite a while ago. But what's interesting about this is you can see here, hedge funds were burned big time trying to short shares of AMC Entertainment Holdings with losses of approximately $4 billion after the stock did this. Now, what we're referring to is, of course, when AMC was in the double digits, and this was pre-reverse split. And you can see with a 10% movement and how much shorts were losing back in those days. Now, you have to understand is that nothing has changed in terms of the short positions that still exist on AMC. The positions that they held back then is still held by these very shorts, but the only difference is that these short positions are even bigger. There are a lot more synthetic shares, there are way bigger short positions, and there are more swap positions for the AMC right now. And so we have to realize is that if during those times when we take a look at a 10% and 12%, 20% movement in AMC, and it was able to cause shorts to lose billions of dollars, you have to understand how this would affect them now. And so that's why we talk about when AMC goes up even the tiniest amount, why we're faced with halt, why we see these short sellers start to panic, why we see the liquidity start to get scarce. And that's why we talked about the increased margin and why shorts are constantly worried. When you take a look at the price of AMC today, now as of right now we are up 3.5%. But at one point, we were up over 7% today. And actually, this is after a bit of a recovery because AMC was in fact red at one point. Now, the reason why I talk about this is because when you take a look at the market for AMC at the dark pool, you can see 79.96% with over 30.8 million volume being hidden away. And so one could argue is that yes, the rest of the market is falling as well, so it was normal for AMC to fall. However, the rest of the markets didn't see an 80% dark pool usage. And so the very fact they needed 80% of dark pool to then bring AMC down, just for now AMC to back up and still be up 3.5%, and you guys can see the volatility we've had in the last few days, it starts to show what we talked about with the fact that 30.8 million shares being hidden away. We talked about the required increased margin. This is why we've said that these shorts are facing problems, and why we said even a small move would cause massive losses. And so when we see AMC go towards that $2, goes towards even higher, you start to see these small short sellers start to panic and start to having the need to obviously close out their positions. And that's why we've said and talked about this yesterday in terms of the $2,000 per share pre-squeeze and why it could go to $7,000 per share, and that's when apes will start selling, because we talked about the money that's obviously involved in this. If back in 2021, we were able to see $4 billion involved for AMC, the money for now has only gotten bigger because they've sunk more money in. We talked about the cost of financing. We talked about the cost of creating these synthetics. We talked about the swap positions. Remember that it was big enough to bankrupt Credit Suisse. You start to realize that this $4 billion may become 40 billion, 400 billion. And it's why we've said that the price can easily get to these areas that we have said in the past. Now, another reason for why we're seeing the potential for AMC right now is you can see breaking Netflix stock falls over -5% after reporting Q4 of 2025 earnings. So now it starts to make sense for why Netflix wanted to partner with AMC. And so to all those naysayers back in the days that were talking about how Netflix was going to completely take over, Netflix will bankrupt AMC, you start to see what's actually happening. You start to see that Netflix isn't the all-powerful being that they were saying. And in fact, they will benefit by actually partnering with AMC, and that's what they started doing because they've realized the mistakes that they have made. And I think a big part about Netflix partnering with AMC is that we're going to be starting to see some of this money that went into the streaming services to actually rotate into the theatrical services, into AMC. And so not only is AMC going to profit off of the massive box office for this year, but we'll also see a completely new entire industry and have that shifting into AMC as well. And so this year, I definitely think that AMC has 3 big industries in which it can put itself in. Now, the first will, of course, be the standard movie industry, in which we talk about the box office. It needs to get bigger, and then AMC become more efficient and we'll make more money. The second is about the film distribution. We've already talked about the potential of film distribution. We talked about how Zootopia 2 did extremely well in the Chinese market, and we talked about how more and more movies are now doing well in foreign countries. And so for AMC film distributions, if we are able to actually go into that industry, if we're actually able to make more movies, that's something that will put AMC in a very good position. And then the third one would be, of course, the streaming services. We talked about how Netflix want to partner with AMC. We talked about how AMC wants to stream college football games, college sports games. And so all of these things are going to be big industries that will allow AMC to grow. And so these are the industries that I'm following closely, and that's what we need to obviously realize. And another big thing is that now that we see how AMC is, of course, the safe haven, you have to realize that the market right now is not in a good place. Now, everyone thinks the financial collapse starts with a crash. They don't. They start quietly in places no one is watching. So what we have to realize is that, we've seen in the past with what has happened, and we've seen how every major financial break starts. The real warning signs don't show up in stock prices first. They show up in liquidity, credit behavior, and institutional stress long before the public narrative changes. And that's exactly what we cover on this channel. We've already talked about the liquidity problems, whether it's talking about the repo, the reverse repo, whether it's talking about the mortgages that are going bad. We're talking about how institutions are borrowing more money, they're putting up more collaterals. We talked about the credit behavior, once again, commercial real estate, and of course, private credit as well. The institutional stress, we talked about the importance of repo. We talked about the importance of why these firms are struggling for, what they're doing. And so these things are things that we are highlighted. And it's why we've said that we could look at the markets to collapse at any instance. And so is why we're seeing these institutions trying to find a safe haven of investments. And that's why they are extremely big on AMC. Once again, data doesn't lie. When you take a look at the institutional ownership of AMC, you start to understand why it's at an all-time high, why they're quietly accumulating. Remember, we've already said this. Institutions do not want to help out retail investors. That's why they're in the media, they're very vocal about doing this, doing that, but then in the back, what they're actually doing is the complete opposite. And so this applies to AMC as well. In the media, what they're extremely vocal about is staying away from AMC, is selling AMC shares. But in the back, what they're secretly doing is buying as much AMC shares as possible. So you start to see why they're doing this. And you can see you'll pay us through Hycroft, then pay us through GameStop, then pay us through AMC Theaters, and then you'll certainly pay us for Meta Materials. Now, when we take a look at everything that's going on already, Hycroft is doing extremely well. AMC Theaters, we're seeing the volatility, the same with GameStop. And of course, we have the whole thing going on with Meta Materials as well. And it's something that we have to understand of why we said that there are liquidity problems for the short sellers, because the shares that they have not only shorted, but have shorted 100 times, 10 times, 50 times, maybe even 1,000 times the float is starting to get back at them. And that's what they're worried about. Along with, and this is, I want to remind everyone, and we talked about this, but I just want to remind everyone in case you didn't see, of the margin calls that are incoming. The reason why we say this is because of the whole market right now. Firstly, we have the Japanese bond, where Japan was the last global liquidity cheat code, and that cheat code is breaking. What the world's most indebted government can't suppress the 40-year yield bond. We talked about how it's in charge. We talked about how central bank loses narrative control, and then what they're forced to do. And then we talk about how these are pricing in the risk that it carries. And, we talk about result, forced deleveraging, global liquidity drain, the risk off. And so this is something that we've said. Now, not only is this the case, when you take a look at some of the risk assets, you start to see why this is obviously margin call territory. And then while we're looking at the metal market to do extremely well when we talk about gold, when we talk about silver, this is why it's a worrying problem for the banks right now. Firstly, when we take a deeper dive into the Japanese bonds, you can see, wonder who's been buying the JGBs today and pushing yields back down? The answer is provided by the table here, the Bank of Japan. They've bought 850 billion Japanese yen of the Japanese bond across tenors, and on top, it lent 312 billion Japanese yen to banks. The total is 1.16 trillion in intervention right now. And so this is firstly what we talked about in terms of the things that are delaying the whole process of margin calls, of trying to not only prevent, but also minimize the margin calls if they can't prevent it. You can already see the money that's going in to prevent this. You can already see what's going on with the overall market. The very fact that the Bank of Japan has to intervene should already show you how worrying of a problem it is. We talked about the full 30-year as well in terms of it going to a new all-time high with a 3.587% yield. 14 trillion in yen-denominated CDS swaps at risk of forced unwind. So firstly, you have to realize the Bank of Japan has only intervened with 1.16 trillion. And the reason why that's slowing it down is because we can see something as big as 14 trillion. So this is what we've said. When everything comes crumbling down, when all these illiquidity problem happens, you're going to see the market crash. And then earlier we talked about Highcroft, we talked about the silver prices, and you can see Highcroft today had an extremely good start. We saw ending yesterday 23.51%. Pre-market today, we were already up 12.23%, reaching $48. Now, actually, during market, we see Highcroft actually in the red. But I want to remind you guys, just because it was red for today, and potentially we could see it actually recover, you have to realize it's already gone on an extremely good run. So if people are focusing on the red that has happened for Highcroft today and ignore the 23% yesterday, ignore the 10x, from throughout the last half a year, then I don't know what to say to you. But Highcroft is doing extremely well. AMC is profiting from this. You can even see here, we also have to realize is that I don't think shorts realize how long we are. Nobody's here just for a double up. We are here for life-changing money, $400 a share plus, 10x higher market cap at least, 3.5 billion market cap is nothing for a gold and silver mine this big. Now, we have to remember that the CEO did just go on CNBC today and talk about this. Charles Payne introduced Highcroft as someone with one of the biggest and best gold and silver deposits. So this is something that I think is still being slept on. I know people are talking about this, but the very fact we are only at 3.5 billion, I think is still very undervalued for where Highcroft is. We've been talking about Highcroft for a very long time right now. I still think that there are big potentials. Another thing that I think is interesting is Virtue Financial in another lawsuit. Now, it's no surprise, but once again, you start to see that these institutions aren't here to play fair. They're not here to, participate without exploiting the system. And so every time where I see people saying that these institutions want to help out the retail, I just can't help but laugh, because we've seen plenty of times of how they exploit the market, how they exploit these companies, and how they essentially affect the retail and take the money. So more on this about the gold. Gold reaches new all-time high of 4,800. And with everything that's going on with the tariffs, with the whole Greenland stuff, we're only going to see this get bigger. And we're only going to be looking at gold reaching 5K, even higher. And so that's obviously going to then affect Highcroft as well. So we have to understand the position that we're in right now. We have to understand why we're benefiting from the overall macro news and why the shorts and banks are, of course, panicking. But it doesn't stop there. For those of you who want to understand why I think there's so much more potential, it's because in the gold market right now, we're also looking at how there are staggering in premium, a $370 premium. And so this is not normal volatility. And this is what we've said. For those of you who watched my silver video, I talked about how the Chinese market, the Shanghai Exchange, has been a leading indicator for the silver prices, and the premium is something that we use to understand the volatility and where silver is going to go. The same applies for this as well. So if we're looking at $370, I do believe that it's going to go way higher. Another thing is that people are referring to this for the silver market now as the GameStop for commodities. So that's when you know that these are, of course, big. And for the very fact it's coming from commodity traders in Switzerland, I think that there is a bit of a more of a seriousness on this, and I wanted to bring it to you guys. Furthermore, you know, one of the indications for silver is that it can reach $130 by February 6th. So in very, very short term. Now, if this is the case, you're definitely going to be looking at Hycroft benefiting from this. You're definitely going to be seeing the volatility coming. But then when you want to look at the long term, now I'm breezing past all of this because I covered it in my silver video. I definitely suggest you guys to read it and watch it. But what we talk about here is that in the long term, is that if it matches the M2 ratio from 1980, we could look at it at $531 per ounce. And so it doesn't take a genius to realize is that if silver were to go to 531, if gold were to go even higher, why Hycroft will be the benefactor of that, why it will be a huge investment. We already talked about how when silver goes up 1%, Hycroft is likely to go up 1.7 and even higher. And depending on what they do, you know, we could see that at an even bigger rate. And so you have to realize everything that's going on in the market right now. You see how banks are trying to suppress silver. This is what we talked about with how well we're going to be doing. Now, as always, none of this is financial advice, so do take wise to go himself. Make sure you do your own due diligence and research, and I'll catch you guys next time.